To move into our next session in 2 minutes. The next session is building the business case for housing microfinance in sub-Saharan Africa. This will be a presentation by Kevin Chetty, Director EMEA, Habitat for Humanity International. And once again, the topic will be building the business case for housing microfinance in sub-Saharan Africa. We'll start shortly in the next 2 minutes once the AV's up and running.
There is your clicker, but well, you can do it manually.
No, I'll use it on the computer. It makes it easier. There's not many people here.
Sorry, let me just plug in this for you. Okay, that's going to be your sound.
Is the sound working? This thing too loud, too long. All right, good afternoon, everyone. I think this is an absolute graveyard session, so I'm the last speaker. I'm going to do this slightly differently. Instead of going through this entire presentation, I'm going to give you an opportunity to actually ask me questions, but I'm going to take you briefly through the business case for housing microfinance. A little bit of my background: I've been in banking for more than 20 years, working in low-income households. And so listening to Rob, I've worked in Africa for close to 20 years. And, you know, we've seen affordable housing change across Africa, but we have realized that the access to finance is one of the biggest stumbling blocks. And over the years, we came up with a business model that focuses specifically on the housing microfinance. And I focus on EMEA, which is Europe, Middle East, and Africa. It's quite a big region that I have and which we run. I have three parts to it. I have two funds. I have a microbuild fund, which focuses on lending to banks. I have a shelter venture fund, which actually invests in businesses. And in Africa, I've invested in 4 businesses. One actually in Cape Town, one in Rwanda, one in Kenya, and one coming out of Uganda shortly. So we're doing very innovative work, but I'm just going to touch very briefly on what is housing microfinance. I'm not too sure if the video will play, but someone's going to have to assist me here. So in the region that I run, we've mobilized almost $200 million for housing microfinance. And you probably will want to know what housing microfinance. It's literally giving loans of up to $1,000 to individuals to incrementally build their homes. And we found this absolutely successful, and I'll show you the business case. I'll just touch on a few things. But more specifically, you know, in Africa and in Uganda, right? Can you see the slide there? In Kenya, Uganda? Does it show? All right, so I ran the project about 3 years ago, and we got funding from the MasterCard Foundation. And in getting the funding from the MasterCard Foundation, we mobilized close to $52 million for incremental housing. And if I tell you that the average loan size is $600, and when you look at the quality of homes that has been built, it is absolutely outstanding. What we've realized that there's a direct link between the owner builder and the quality of homes that appears from the African context perspective. So what is the opportunity? I think the opportunity in itself is that, you know, housing microfinance definitely has a space within the affordable housing segment. And I think, you know, we decided to look at the survey for housing microfinance globally, and we targeted all 3 regions. We have quite big regions within the Habitat family. So LAC is Latin America, that's my counterpart. There's Asia Pacific, which is a massive opportunity for housing microfinance, and that's the area that I run as EMEA. And what we found is that almost 95% or 92% of the institutions actually offer an array of housing microfinance products. But more importantly, 30% of the financial institutions report that housing microfinance occupies less than 5% of the portfolio, which means there's a potential within the segment of the marketplace. What I want to do is take you through some of the key drivers, and I'm touch very briefly on some of the key drivers. And some of the key drivers are as follows. I'm just going to look at it now. Is that we've seen with mass urbanization, and if I remember the presentation previously, is that with mass urbanization comes a complexity of finding housing. Though rental is one of it, the other alternative is financing options. And the two that we've seen come through is the housing microfinance option, and the newer one, which I'm testing out in South Africa, is the micro-mortgage opportunity. And we do see that as a massive potential. You know, I've worked across the continent for almost 20 years, 2 decades, and the regulatory or policy environment is very, very stringent, especially around land issues. And if you understand land security and land tenure in most eastern parts of Africa, central and western, you will understand the challenges. But we were able to work around it by developing products, combination of affordability, but look at alternative tenure options. And if you look at the strategic drivers, the institutions that we worked with across the African continent, we found that those that have a social impact as part of the strategy were highly successful. I think beyond that, between 40 to 60%, most of the institutions consider diversification and clients' needs as the key strategic decision making in using housing microfinance. And we found that, you know, capacity is always a challenge, both at an organizational level, institutional level, as well as a capital resource level. So what I've done is that I have positioned a fund specifically for Africa. That fund will come live in the next 6 to 12 months. We have DFIs, both from a Europe perspective and out of the US, that have seen our business model, that have seen the ability to scale up the business model, that are willing to look at the funding side of it with us as well. Okay? So I'm actually looking forward to launching that in the next few months. In our segmentation, if you look at the segment opportunity, we found that majority of the people that we've targeted are female households. In fact, more than 50% of them are within the female segment. And I think one of the key drivers within this context has been that, you know, within the segment, what do people actually use the funding for? And we found it from basic construction to actually putting up water tanks as well as solar. And if you look at some of the loans, they can be as low as $300 to $400. But what's very unique about the entire product, or even the housing microfinance strategy, was that the delinquency outperformed most of the other portfolios within the microfinance institutions. On average, the delinquency, or we call it PAR, that's portfolio at risk, was about 5 to 5.6% versus a traditional housing microfinance or microfinance product, which was 6.4%. And we found that extremely successful. What's even a bigger driver is that the average loan size across the region that I run is between $1,000 and $2,000. But in Africa, it's about $600. And people have asked me, what is the income of the households or even the individuals? We service people that earn $5 a day, very successfully. And we've seen that by understanding the cycle of money, by understanding the propensity to pay, you can easily position a product that has a low PAR or even delinquency value. I do apologize for the shortness of the presentation. It was kind of odd to fly, you know, on the seat of my pants without a proper presentation and a video. But I just want to open it up to questions. You know, there's a lot of knowledge that I like to share rather than simply talking through a presentation. So feel free to ask me as much as possible. Yes, ma'am. All right, so we've worked with the institutions to develop a product which is called HSS, which is a housing support service. As part of the housing support service, they have quality checks where they physically go and inspect those homes to see that the funding has been tied directly to the product. And what we have done in the last 12 months, you'll see it go globally at the moment. We've worked with a company out of the US called iBull Technology, where we've literally taken the entire housing value chain and put it on, digitized it onto a phone. So I've tested it out in Kenya in the last 6 months. It's worked phenomenally well. We're presently launching it in India, and we've partnered with Mahindra Financial Services. So you'll find using the phone, the individual can actually take a photograph and send it to the institution in a closed loop system, yeah, as a geolocator. Yeah. So we've used technology to our advantage. Any other questions?
Where is your project in Kenya and what are the prizes?
Excuse me?
Where is your project in Kenya located and what prizes are you looking at?
So the project that we launched in Kenya, it's coming to an end in the next 2 months, is with KWFT, Kenya Women's Finance Trust. That's one. And in Uganda, we worked with Centenary Bank. Those are the two banks. And what, in 4 years, 3.5, 4 years, we've exceeded our expectations of over 60,000 products sold individually for these sort of loans. And the PAR is less than 5%. Yes, ma'am. So the term is up to 36 months. But on average at the moment, it's around 18 months in Kenya. One of the reasons is that the households would like to pay off the loan sooner than later, and they've seen the value of the product. So they've realized if I pay it off in 18 months, I can get another loan to put another addition and incrementally build my house. If people understand the concept of self-build, John Turner, most architects will know that. It is a concept that we've seen work tremendously well across Africa and Middle East.
Hi, thank you for the presentation.
I do apologize for the shortness. It was difficult presenting.
Yeah. Just a quick one on collection. How exactly, you spoke of someone who maybe earns $5. How exactly do you manage collection? I'm not sure if those people have access to banks or anything of that sort, in terms of bank accounts or debit orders or anything of what we're used to in these sorts of markets.
Yeah. So about 8, 9 years ago, I launched a bank in Africa. If everyone knows Bank ABC, that's one of the banks. We were part of a team. We developed a model there, and I'm taking you back a few years, which was called a community-based banking model. What it means, you literally take the bank directly into the face of the community. That's one. 2, you elicit the support of leaders within the community, indicating to them that you are affording or advancing loans to a variety of people in the community. So it's a combination of getting closer to your community, understanding where they live, and understanding the leaders. And it's amazing when you tie that entire value chain together, people will pay.
And in terms of collection, what is the current non-payment or defunct?
So it's less than 5%.
Okay.
Are there any further questions? I'll be standing up. Please feel free to have a chat to me. And yeah, if there's anything, if you get my details, the business case for housing microfinance is on our website. Please feel free to have a look at it. And there's some other innovative models that we're currently looking at the moment. Thank you. I do apologize for the shortness of the presentation and flying on the seat of our pants without proper kind of proxima.